Good day, everyone, and welcome to another episode of Friar Financial's Financial Forum. Um, Today we are excited as we will be wrapping up our conversation regarding the 100,000K tax-free strategy and going back through all the accounts needed and actually how to put this strategy into focus. But as always, we will begin with our markets in motion segment. So, looking at the markets last week, stocks pulled back a little bit last week as investors were wrestling with two kind of major themes. We had renewed anxiety around artificial intelligence disruption, and we actually had a hotter than expected reading on wholesale inflation. So, with that said, the S&P slipped a little bit, almost a 0.5% at 0.44. The Nasdaq fell nearly 1%, and the Dow dropped 1.27%. However, overseas, the markets were a bright spot as the index was actually up more than 1%.
Yeah, and
Now
so
over to Jeff.
yep, and then the week also kind of opened up under pressure after a new research report circulated across Wall Street, and then it suggested that AI could reshape the broader economy and potentially influence unemployment trends as well. So that headline alone was enough to weigh on a wide range of industries, and traders reassessed which business models would be most vulnerable. So some interesting stuff there.
Yep. So that was kind of like Tuesday, I think. And then by middle of the
Hmm.
week, by middle of the week, the investors saw an opportunity in what looked like an oversold AI trade. So software, cybersecurity, and any of the AI linked tech stocks all participated in a very strong 2 day rebound. So, and also optimism grew ahead of the major AI chip makers' Q4 earnings reports, which was NVIDIA for last week. So that helped lift all three averages in the middle of the week.
Hmm.
But
Yeah, that momentum didn't last long. The markets kind of turned lower again on Thursday and Friday, and then with the Dow taking a brunt of the decline. So, and then interestingly enough, even with last week's weaknesses, the Dow still leads the S&P and the Nasdaq year to date. That just shows how uneven this market has been beneath the surface. So, yeah.
yeah, yeah. So the other big story, as we said, was inflation. So Friday's delayed producer price index showed wholesale prices actually rose 0.5% in January, and that was well above our expectations. And this is important because the PPI measures business cost. So you can see where we're going. Investors worry that higher input prices, of course, are then going to eventually flow to the consumers, lowering profits. And so, that's a concern too if those PPI indexes and those costs are rising.
Hmm. Yeah, and then that we'll kind of dive deeper into some of that stuff as we get into our finance and focus section, as always. And then so looking ahead, we've got a full slate of economic data ready to come out. So Monday is going to bring us manufacturing numbers along with auto sales. Wednesday features the ADP employment report, and then Thursday gives us our jobless claims. So full of Q4 productivity and import prices. Um, Also coming out on Thursday. And then the big one lands Friday. The federal employment report is what comes out on Friday, so that's the big deal.
Yep. And let's see, on the earnings front, we've got cybersecurity leader CrowdStrike reports Tuesday, Costco and Marvel on Thursday. So those names will give us a good insight into the strength of the consumer as well
Hmm.
as some ongoing AI demand. But the
Yeah,
big story is what's going on, Jeff.
geopolitics. We've all been seeing the news lately, so geopolitics is what's remained front and center. As we saw, the U.S. and Israel have intensified strikes on Iranian missile sites and naval assets, and that's just widening the regional conflict. Iran's leadership is signaling no willingness to negotiate, despite reports of back channel outreach that we can't see. And then that kind of uncertainty has pushed investors towards a safe haven currencies like the yen and the Swiss franc. So, yeah, I know we've all been seeing everything that's been going on lately. So that's kind of how it impacts the market.
Yep, and of course, when we're talking about the Middle East, of course, we're talking about oil. So that's going
Hmm.
to impact the energy market. So everybody's watching that Strait of Hormuz closely. Iran has basically said they are not letting any oil tankers through there, and roughly 20% of global oil flows through that point. So Goldman Sachs has modeled several disruption scenarios. A full 1 month closure with no offsets could add $15 per barrel to oil prices. Even partial disruptions could move markets meaningfully, and Europe and China are particularly exposed.
Yep. And then it's not just oil too, Marcus. Kind of Goldman has
Hmm.
also warned that the European natural gas prices could more than double if shipping through the Strait is halted. With global equities kind of already on the edge, the energy volatility is another layer investors will be watching closely. So we'll be paying attention to that.
Hmm. So, kind of wrap it up, markets are navigating AI driven uncertainty, inflation data, and all this geopolitical tensions that could definitely influence our energy prices. So, it's a
Yeah.
reminder to stay diversified and stay disciplined more than ever in these portfolios. And that brings us to our feature segment today, Wealth Wisdom Workshop and the $100,000 tax free retirement strategy. So, Jeff, lead us off.
Yeah, and it's time to wrap everything up kind of from our last segment. So today in our Wealth Wisdom workshop, we'll be walking through one of the most powerful planning strategies available, and that's how to engineer up to $100,000 of tax-free retirement income. So to make this work, we need four specific account types, kind of as we've been going over throughout these episodes. And then each one is going to play a different role in how we sequence withdrawals. First, you got your traditional IRAs and your 401ks, and that's including your S&P IRAs and solo 401ks. So these are your pre-tax accounts. Remember that, pre-tax accounts. And they're great for deductions up front, but taxable later in the future. So we use those very carefully. Second, we got your Roth money, your Roth IRAs and your Roth 401ks. These are your after tax accounts. So when you hear Roth, all that means is just after tax money you've already paid taxes on. And the qualified withdrawals from those accounts are tax free because you already paid the taxes on those. And they give you flexibility and protection from future tax increases. And then third, you got your taxable brokerage account. And this is your most flexible bucket. And long-term capital gains can fall into the 0% capital gains bracket if your income is low enough too, which is a huge advantage. That 0% bracket is such a big advantage. Um, and then we get into the last one, and that's the health savings account. The only account with triple tax benefits, deductible contributions, and tax-free growth, and tax-free withdrawals for qualified medical expenses. So that's kind of how we tie everything in to kind of take care of you and get to that tax-free, 100% tax-free retirement. And I'll let Marcus kind of dive a little bit deeper in that.
Sure, sure, sure. So once we've got those accounts in place, that's where we can build this strategy. And that's really where the magic happens. Because with the right sequencing, we can stack multiple tax free income sources together. So let's take a look. So we start with your pre tax bucket. We take withdrawals from your pre tax bucket only up to the standard deduction, which actually keeps those dollars tax free. So in 2026, a married couple under age 65 has a standard deduction of $32,200. So that's our first layer of tax free income. Next, we're going to move to the taxable brokerage account. Here, we sell positions and realize long term capital gains up to the 0% capital gains tax bracket. So in 2026, that bracket allows a married couple to realize $66,700 at a 0% tax rate. Those two together, we're already at $98,900 of tax free income. And we haven't even touched the Roth yet. So next, we will use the HSA to pay for qualified medical expenses. As you know, those withdrawals are tax free and they don't affect your tax brackets. Finally, we fill any remaining income needs with qualified Roth IRA or Roth 401k withdrawals. Those are tax free as well, and they don't push you into higher brackets or affect your capital gains rate. And that's how you engineer $100,000 of tax free retirement income.
Yep, and this strategy is especially powerful for early retirees. I just want to add that little tidbit in there. Um, so those years before Social Security begins. And it also helps people delay Social Security and capture that automatic growth that the government gives you for waiting. And we'll cover some of that a little bit more in a future episode is kind of Social Security is certainly kind of a wild card for pre-retirees and retirees when structuring your retirement income plan too. So, um, yeah, who
Absolutely.
knows what Social Security will look like by the time people young get to that point of retirement. So,
Absolutely. So what made all of this possible? Because my generation, of course, didn't have some of these things in place. So let's look back
hmm
at that timing. So we had two major changes in tax law. So the Tax Jobs Cuts and Jobs Act of 2017, that's what created that 0% capital gains bracket. So you kind of really couldn't even think about the strategy until 2017. And then Roth accounts were created in 1997. So those have been around for a while. But that 0%, as you can see, that 0% capital gains bracket is key. So when you combine these tools with smart planning, you gain control, flexibility, and tax efficiency in retirement. So until next time, please, again, get those accounts in place. You see that 100% tax strategy. Next week, we're going to talk about this in a little more depth and how you actually, in reality, fill up these brackets from your current income. So until next time, everybody, Marcus here, Jeff there. Looking forward to helping you guys with your planning, financial planning, investment management, estate planning. And again, be sure to follow the channel, share with people as we get this information out. All right. So until next time, everyone, have a great week. Take care. Bye bye.